You know, Jerry, I'm not going to tell you that these will increase in value or even hold their current value. The truth is, you bought them because you like them. They have value to you. That's what matters.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Monday. That's right, back on the grind. Welcome back to the channel. And are you not surprised that, of course, we kick off the week with some craziness, a little bit of sporadicness in the Bitcoin price this morning. Now, currently, we're only down 1.39%, so not really that big of a deal. But if we actually have a look at what happened, we were sitting at around $10,317, and Bitcoin plummeted all the way down to $10,071 on futures, only to instantly wick back up to $10,166. Now, I do want to talk about the Bitcoin price short term, okay, especially the next 2 weeks are going to be very crucial. Maybe even the next week. We have very, very low volume right now, extremely low volume. I mean, yes, we had this little bit come in right here, but overall, it is not looking too good. And when we have this low volume, you have moves like this where the prices can spike in either direction. And actually, I want to go over two specific times that we had very similar situations to what we are seeing right now. One situation turned out extremely bullish. The other situation turned out extremely bearish. So what are we looking at moving forward? Because we know this thing is going to break out within the next 2 weeks massively, and usually it doesn't get to the end. So that's what I want to talk about today. But also, beyond price, I actually have quite a bullish video. I know regardless of what happens to the price today within the next 24 hours, I do have a very bullish outlook on Bitcoin. And fundamentally speaking, you guys are definitely going to want to stick around and check out the rest of this video. I think you are certainly going to enjoy it. That being said, welcome back to the channel. Today is Monday, so we are going to be doing a Ledger Nano S giveaway at the end of the video. If you guys want to skip around, I do have timestamps below, in case there's something that interests you more than something else. That's it. Let's get going. Let's dive in, guys. So having a look, let's give this a quick refresh live. Bitcoin dominance still at 69.5%. The overall market cap lost about $3 billion in that drop that we just saw. So Bitcoin didn't gain in dominance. So this is actually people legitimately just exiting right now, just kind of selling, potentially even capitulating. Why? I'm not too sure why you would stick it out this far just to sell, but we will dive in and have a look. We do have some altcoins up today. VeChain is up 8%. Metaverse Quant still putting in 7%. Theta, Synthetics, Bytecoin, ABBC, Ardor, but really very minuscule gains now. And, Bitcoin took the dump and it's kind of trying to pull everyone down with it. So that is the situation moving forward. Bitcoin dominance 71.84% over on TradingView. You can see right here, even with that massive wick that we had, still putting in less than $500 million. This is absolutely pathetic. I'm sorry. This is just extremely low, guys. And of course, Coin Farm just never loads when I want it to. There we go. Yeah, massive sells. You can see strong sell, neutral, okay. Yeah, so, obviously right now, clearly, guys, the shorts because of what just happened this morning. But be careful, though, because now that the shorts are piling on, I wouldn't be surprised to see some kind of a counterplay. But could be wrong. We could continue down further. So let's dive in and let's have a look at the charts. Well, essentially, this is sort of a closer look of what happened. You can see zooming in, it looks a little bit more dramatic. However, zooming out, doesn't really look so bad, does it? But as you can see right here, I have the chart pulled up that's basically showing the bull flag. This was the upwards trend that we were putting in. We had supported it quite well, basically back since about August 29th. Currently, we did fall below it. We are still in the blue box territory, so this is good. But obviously, this chart right now isn't really very helpful. So I do want to switch to our triangle. We do have two triangles. We have the actual descending triangle that's flat on the bottom. And I also put this uptrend in here with the yellow. So you can see that there may be sort of different breakout periods that we could be looking at. Currently, though, we have been supported right here by this $10,176 level. Now, I had this level in yesterday, and I said if we fell, we might get supported. And currently, we got supported. So we are still in the blue zone right here. If we fall lower, I would expect to be supported by this downwards trend. And then finally, ultimately, hopefully, by the yellow dotted line, which would be around that $9,500 level if we do fall any lower. Since we did have that little dip this morning, we might just bounce around in this area a little bit more, or if we had to try to make a breakout today, we'd still have to get above that $10,600 level. Is it going to happen today? It might but probably not, guys. To be honest, I think this thing is probably going to push out a little bit farther. In my opinion, when you look at this is just a great opportunity for whales to accumulate, play the markets, manipulate the markets, bounce up and down, right? Short, long, short, whatever. So personally, I think they're going to milk this thing a little bit longer because we could push this triangle all the way out to about October 11th. And I do think if they can get one more kind of dump and pump out of this thing, I think they'll try to squeeze every last drop out of it. Just my opinion. I could be wrong. We could break out today for all I know. But that's usually what happens with these whales. But what I do want to talk about is despite even having that move this morning, we still have extremely low volume. And I want to show you right here. You probably can't even see it, but there's a little purple line right there going along the volume you could see. And the last two times that we had volume this low, well, the first time was right here, essentially, basically on March 31st, which was the day before April 1st. And what happened? Well, we had this massive pump right here. And if I actually pull out a percentage tool just to kind of show you how much we pumped in essentially just one day, Bitcoin pumped 22.25%. And that was in one day, okay? But there was another time that we had volume this low as well, and that was way back here on November 10th. Now, we all know what happened 4 days later, right? Well, we had a massive 50% dump.
Oh my God!
So you could see that when volume gets this low, Bitcoin becomes susceptible to these massive moves. The order books get thinner and whales come out to play. So we are looking for a massive move. Now, personally, I do think we are going to have a move to the upside eventually when we get to the end. But short term, we still could go lower. Okay, for example, even if we're looking at this head and shoulder pattern, just to reiterate, if you guys don't remember, essentially, you have the head right here, right? And then you have one shoulder and you have another shoulder. But within that pattern, like I said, let me just change the color so you guys don't get confused. I didn't mean to do that. Well, whatever, it's green. But essentially, okay, we have 1, 2, 3, right? So this could come down, maybe even wick down to about that 10,070, which is interesting because it did do that on futures, but it didn't do that on spot over here. This is Huobi, for example, but either way, I checked all the spots. It didn't do it. So we could potentially even wick down to that on spot market, but really getting above that $10,471 level is what we're looking for short term. However, we have still respected the green, curve that we've been looking at. The yellow dotted line represents backed. We only have a few days until backed very soon. So I'm keeping my eyes on it. If we were to wick down, we could still dip below 10,000 to 9,950 if we were to respect this curve. If not, then, obviously refer to what I was speaking about earlier. We might hit some of those other levels. But I want to talk about some fundamentals, okay? Because this is really what gets exciting. This is what keeps me going, because let's be honest, price is so boring right now that if we're just going to look at price all day, well, you might as well just go do something else, right? So if you guys don't know Travis Kling, he's a former portfolio manager was at leading Wall Street fund, and he basically dove into Bitcoin hardcore. So he's basically saying with the entire world racing to see who can devalue their fiat currency the fastest, assets with provable scarcity should begin to shine. And clearly Bitcoin is probably one of the best assets to prove scarcity. I mean, everything is on the blockchain, right? Distributed ledger, censorship resistant, right? Consensus, you can see it. There's only 21 million. I mean, it doesn't get more hard money than that. And also don't forget Tom Lee. You guys know we spoke about him yesterday. He says that Bitcoin is becoming increasingly a macro hedge for investors against things that could go wrong. Rate cuts are adding liquidity. Liquidity is pushing money into all these risk assets and also hedges, which is helping Bitcoin as well. But interestingly enough, if you have a look right here, you could see Joe McCann basically says the Fed has caved and has guaranteed Bitcoin's bull run well into 2020. And you can see leftist Bain says the more the Fed makes interest cut rates, the more people will be looking to sell their stocks and park it elsewhere until stocks bottom out, using Bitcoin as the new store of wealth. Now, here is Travis Kling, and he was on CNN, and I absolutely have to play this clip for you because I could not have said it better myself. There's been a little bit of a sort of disagreement of whether or not we should be using Bitcoin, right? Some people are saying we should be spending it. We should be using it. We have to use it. If we don't start using it, it'll never gain adoption. Whereas you have the other half of the people saying, no, we need to hold it. Bitcoin is a good store of value. Spend the paper. The paper's devaluing so fast. Get rid of it. Hold the Bitcoin, right? Well, Travis Kling actually chimed in on that, and you guys have to hear what he had to say. And after this, I definitely want to talk about it. So stick around.
So there's many use cases for distributed ledger technology. Money is the killer app for distributed ledger technology right now, specifically store of value. And people, I think, some people try and put a knock on Bitcoin that it's too slow to be very good for payments right now, to be used as a method of exchange right now. And my argument there is Bitcoin is too good at being a store of value right now to be a good method of exchange right now, because nobody wants to be the Bitcoin pizza guy that spent 10,000 Bitcoin on a pizza. And as the price increases over a number of years and the volatility decreases, which is certainly our expectation, it's going to be better for a method of exchange. But in the meantime, it's a great store of value.
So the reality is that Bitcoin actually is a phenomenal store of value. Despite the recent activity in the charts, we've gone over this. There was really only about 60 to 90 days, I think, in Bitcoin's history that it would have actually been non-profitable to buy. Obviously, some of those days being recently since we hit the 14K, but I'm sure within probably a few months, it's just going to be laughable, these prices. But that being said, if you guys do want to watch the rest of this video, I did retweet it on my Twitter. You can see Chad LTC posted it. It's about 5 minutes long. Really great video. I definitely think that you guys should look into that. But what it kind of reminds me of is Gresham's law. Now, I'm not sure if you're familiar with this, but essentially it says that bad money drives out good money, right? I'm actually going to play this video right here. It's a really good explanation, and then we're going to discuss.
Let's assume you have two coins, a silver one and one made of less valuable copper. Furthermore, legal tender laws state that they have the same value and merchants are forced to accept both. We'll also assume you're hungry and, coincidentally, a loaf of bread costs exactly 1 coin. Which of the 2 coins will you use to pay the baker? Gresham's law, named after Sir Thomas Gresham, basically tells us that bad money drives out good, or in other words, that of course you'll want to keep the more valuable silver coin and use the copper one. Since other people will do the same, silver coins will eventually no longer circulate because everyone will just hang on to them.
So you can see the point of what Gresham was trying to really say is that right now, if I give you the option, right, say I'm a store owner and you're going to buy something from me, okay, and it's $5, right, and I take Bitcoin, I do. So you have the option of giving me a $5 bill or paying me $5 worth of Bitcoin. Now, it's only $5. Maybe you won't really care for $5 worth of Bitcoin, but what if it was $100 or $1,000? Do you really want to pay me $1,000 in Bitcoin, or would you rather give me $1,000 in fiat? You see, the point is that we value the Bitcoin. We know Bitcoin's intrinsic value. We understand its capability and its capacity, right? Compared to fiat, which is just endlessly printed. So, and just to kind of break it to you, here's something interesting. Most people, when you go to Google, you'll type in, BTC to USD to try to figure out the Bitcoin price. Well, if you type in USD to BTC, it'll actually show you the inverse chart, which is actually the dollar's value compared to Bitcoin. And you can clearly see that, I wouldn't invest in that coin. So basically that's the situation. So what Travis is saying essentially is that right now, Bitcoin is a great store of value, right? Eventually, it will become a currency. But currently right now, compared to other currencies, given the option, you're going to want to spend the paper. So that is basically just a situation moving forward. Also, Bitcoin's hash rate and mining difficulty have jumped 60% since June. In fact, you can see right here that there are more than 600,000 new ASIC miners that have come online in just the past 3 months. So obviously, the miners are bullish on the price, and research by British legal firm Micklemore's LLP basically found out that millennials are very interested in Bitcoin. Now, obviously, this was a very small, how many people was it? It was only about 500 people, but you can see right here, it says that, millennials, which is, by the way, if you don't know, the generation born between 1981 and 1996, so guess that makes me a millennial, apparently. It says that with investable assets of $31,000 or more, shows that 20% have invested in cryptocurrency such as Bitcoin. This far surpasses the national average of about just 3% and even rises to 29% for millennials with more than $93,000 worth of investable assets. And there was a speech that Tom Lee gave that I don't have pulled up right now, and he was talking about like the years when people start investing. And right now is the time when millennials are really looking to start investing, and they are looking at cryptocurrencies, right? So that is a situation. Also, let's not forget our presidential candidate, Andrew Yang, is pro-blockchain. This guy's all about blockchain. And actually on this show, I'm not even sure what channel this is, but it's Off the Pill Podcast. I'm not going to play it because this channel has 21.4 million subscribers, and I'll probably definitely get hit with a copyright strike if I play anything. But I am going to drop this video below, and they do go into talking about Bitcoin and cryptocurrencies, and he's like extremely open to it. So definitely check it out. It kind of got me excited imagining having compared to Donald Trump coming out basically saying that cryptocurrencies are worth less than air, right? And then you have Andrew Yang saying, oh no, this is a great technology. We should be embracing it. We should be trying to like utilize it and learn. And so yeah, definitely check this out. I wish I could have played the clip. I just don't think I can as far as that is concerned. But hey guys, check this out. Look at the altcoins for all my altcoin friends out there. So well, damn, now we're closing below it again. Well, we were above it a little bit. I don't know. But essentially the resistance that we really need to get above, guys, is around the $73.6 billion overall market cap for the altcoins. You can see right here, this is actually part of the market cipher. They also offer the support resistance. You can check it out. I like using it sometimes for sort of strange measurements like total caps of altcoins and things like that. But you can essentially see that right now the level to beat is around, like I said, what did I say, 73.6, 74. So essentially that is what we're looking at. But, you know, Bitcoin got hit, altcoins got hit. It's kind of how it goes, right? But having a look at this, now this is actually not too good of news for some of the altcoins, in particular privacy coins, okay? Because you have the Financial Action Task Force, or I guess FATF, I don't even know how you pronounce it, but long story short, in June, the FATF, the Global Money Laundering Watchdog, issued its final crypto guidelines retaining the travel rule, okay, which requires exchanges to collect and transfer customer information during transactions. The information included, yes guys, your information is not private, by the way, the originator's name, your account number, and your local information. However, OKX Korea said that privacy-oriented coins don't allow collecting this type of information because they're privacy coins. So they unfortunately had to delist Monero, Dash, Zcash, Horizon, and Super Bitcoin. I'm sure you're very upset about that Super Bitcoin delisting, but the question is, if this is happening at OKX in Korea, are these going to happen to other exchanges as well? Are we going to see privacy coins start getting delisted all over the place, right? That is something to keep in mind moving forward. Now, Binance Chain has conducted its first full-scale hard fork. We were just talking about yesterday how there are no smart contracts on Binance Chain. Well, the recent upgrade to Binance Chain has introduced new important features, such as enabling Binance Chain to conduct atomic swaps to other platforms, which is good, of course, and of course, smart contracts have been implemented, but I think more of what everybody's talking about is this happened over on the Binance Futures. So a market maker, and this is straight from CZ, tried to attack the Binance Futures platform. Luckily, no one was liquidated, so good on you guys for doing the right thing. They say they use their index price, not the futures price for liquidations. Our innovation? I'm not sure that's their innovation. I think a lot of the other guys do it. I think BitMEX and Bybit also do that as well. I'm pretty sure. But anyway, only the attacker lost a bunch of money, and that was that. So the attacker is a well-known account that trades with Binance and started their own futures exchange a few months ago. This was their second attempt to try. Shame. Oh, but then CZ had a chat with the client, and it was an accident due to a bad parameter on their side. Not intentional. All good now, guys. All right, so speaking of these, though, these are, so many reasons why regulators are afraid. People are afraid. They think the space is totally manipulated. Kinda is, let's be honest, but I mean, what markets aren't, right? So actually commenting on ICOs and scam ICOs and all this other stuff, Vitalik Buterin actually proposed a suggestion. You can see right here. I'm just gonna kind of paraphrase for him. Essentially what he was saying was you can lock up the funds in a smart contract and they would essentially be sort of dropped slowly over time. The money would sort of drip out so that they wouldn't have access to all the funds. Another thing you could do too is something like Chainlink has with Oracles. We could have the money get unlocked over time as they hit their milestones, right? That's another thing too, and would definitely prevent having all this money, because the problem is a lot of these startups, when they get all this money, let's be real. Most of them have never seen that, like that kind of money, right? Like $42 million raised for like a prediction market or something like that, right? And it does kind of not really incentivize these guys to really provide what they said they would in the white paper. So I think that's a really good idea. Let me know what you guys think, sort of like for ICOs in the future. You know, locking up the funds, like your investor funds would be locked up and then slowly distributed over time based on either milestones or just sort of like a drip feed. I think it's a pretty good idea. Let me know. But, you know, not just fear of that with ICOs and getting liquidated and manipulation, but now we also have fear for even Libra, you know, because people are concerned about, look what Facebook has already done with our data, Cambridge Analytica. You've probably seen the Netflix documentary, The Great Hack. If you haven't, you definitely need to watch it. You could see officials from 26 central banks, including the U.S. Federal Reserve and the Bank of England, are meeting representatives of Libra. Libra's founders have been invited to answer key questions about their stable coin, and they say with the findings feeding into a report for the G7 finance ministers in October, which is probably going to be pretty massive, and I'm like almost certain cryptocurrencies is going to be a topic of discussion. You can see they say European lawmakers are reportedly concerned that Libra will become popular in the EU, where customers still face difficulty making overseas payments. So, I mean, that is kind of the idea. But I think it's funny how ever since Libra came out, now all of a sudden the governments are like, you know, actually, I think we kind of do like Bitcoin. Let's figure out Bitcoin. Let's figure out how to work with Bitcoin. So I think that's just kind of funny. Yeah, and then look, you're seeing a report from the Financial Times shows that Deutsche Bank, the recently suffering German bank behemoth, has confirmed that it's going to be joining the Interbank Information Network by Bitcoin skeptical JP Morgan. But here's the interesting thing. This is a 60-bank network which uses, you guessed it, blockchain, and it allows those involved to exchange transaction information between entities. So the idea per the report is to provide member entities with cheaper and more time-efficient payments by making key information easily accessible for processing. So, all right, they don't like Bitcoin, but at least they admit that blockchain is, you know, pretty much the way to go. So I just always love ending on these sort of stories where like you have JP Morgan saying, screw Bitcoin, but we're going to make JPM coin and we're going to put our stuff on the blockchain. It's like, so you're kind of admitting it is a good technology and it is a good idea, right? But that being said, guys, you know, that is it for me today, and we do have to give away the Ledger Nano S, which I still have to go to the post office and pick them up because for some reason they just decided not to knock on the door yesterday. So having a look, we did have 7 videos, you know, one for each day of the week. So that is 7 videos, generate. So yesterday's video, wow. So yeah, congratulations. If you're a new subscriber, you might be the winner. So we got to go to yesterday's video right here. Copy this, go over to our random comment generator. By the way, guys, I don't know if you can hear like 3/4 of the way through the video, the guy started mowing the lawn in the background. I don't know if the microphone picked it up or not. Sorry if it did. 708 unique comments. All right, drum roll, please, for the Ledger Nano S. Gimme Nano! Joey Shabadu, you got the Nano. Hope I said that right, buddy. You got the Nano, so you know what to do. Do not go in the comments. You know we went over this yesterday. Hit me up in the official Telegram or my About section, which is my only official email, the only 2 ways you can get a hold of me. Congratulations, and yeah, there's another winner on the channel. So thank you so much once again for everybody that's been liking, subscribing, and commenting. You guys rock. Also, friendly reminder, don't forget that Bybit is... Oh, are we dumping again? Geez, we're still Oh, no, we're not really dumping. We're just kind of like wicking in the... It's going to be a little rough, guys. But long story short, Bybit, you know, like I said, they are still doing their promotion. So essentially, if you deposit 0.1 BTC, you get $60. 0.2, you get 110. You do have to use the referral link below. But that is it for me today. If you did not check out the tutorial, I do have one popping up above. But... I'm going to leave it there, guys, because we know the situation. We know we're getting very close to the end of this breakout. And yeah, I mean, it is what it is, guys. Is it going to be up? Is it going to be down? You let me know your opinion below. Obviously, I am very long-term bullish. Short-term could be a little bit rough, but you know what? I'm not afraid to accumulate lower. And I already told you guys, if we go down to like those crazy low levels, like 8,500 or something like that, I mean, not financial advice, but I'm going to put in a big-ass long and just ride that wave. Don't do what I do, but that's just what I'm thinking. Anyway, guys, thank you so much for coming back to the channel. You guys